Hello everyone, this is Jeff from View from the Bunker. We're going to have a quick chat about payments and account of tax. Does it affect you? Is it fair? Quite often or not, probably certainly at this time of year, I deal with a lot of people, a lot of clients who in the tax system, they have made payments and account, they're due to make payments and account, don't quite understand it, don't think it's fair. Why should they pay my tax up front to the government? They're just going to waste it, etc. So payments on account briefly, if you've got untaxed income in the year and it is above, and the income generates a tax bill that's normally above £1,000 or more, that £1,000 will be due in the 31st of January of the tax year. You would then trigger the payments on account, which should be half of that, which should also be due in January, and another half in July. So to keep things simple, if you had a tax bill of £1,000 because you had some rental income or dividends, whatever it is, a business, you'd have £1,000 to pay 31st January, you'd then have £500 to pay again 31st January, and another £500 to pay 31st July. So when it gets to the following year, if you've done exactly the same income, you'll have paid your tax to the tax amount. And a lot of people sort of get in there, I've paid my tax up front. Well, have you really? It's the other thing, when I was employed, and sure, quite a lot of you are employed, you work your month, you work your week, you have your tax taken off you, then you don't get your money without you being taxed a year and a half later, do you? No. So I'm not a big advocate, and I don't normally stick up for HMRC or and as you'll see from quite a lot of videos. But if you're making payments on account of tax, you are paying your tax in advance of the deadline for the following year, but you aren't actually paying your tax up front because you've had your income and you've not had any tax on it. So you're having the benefit of the time. So it's like, if everyone was employed and waited 12 months to pay the tax man, that's made a big hole in the pocket there. So paying your tax in January and in July, essentially when it gets to July of each year, you'll have paid all your tax in theory if there's no change in income up to the end of July, but you've still could have had the benefit of a year of paying no tax. So if you've earned X amount of money, your tax bill is £1,000. It hasn't been taken off you every week and every month. It's been taken off actually a long way down the line. That's why a few accountants previously used to mess around with year ends, try and push the accounting periods back and the tax bill even further back, just to help with cash flow and things like that. Can't do that now because of trying to unify everything into the 31st March and 50 April years. So you aren't paying your tax up front, guys. When you make a payment on account, you're not, because you haven't had it taken off you in the first place. So HMRC are out of pocket essentially. So they do need, that's the payment on the tax on the account system. I think it's fair. They may want to eventually move to when they get making tax system all up and running. They might want to move to a monthly system. I think this is only an opinion. They would want everyone eventually to report monthly income and pay some tax on it. Maybe starting by doing it on a quarterly basis. I've already got a little bit of that through the VAT system. We'll see what the making tax digital regime brings in the next few years. Probably won't be simple, probably won't be easy. It's probably got the staff to implement it, but who knows. Just another little thing on payments on account of tax. If you are in that system, if your income is likely to be down the following year, you can look to reduce your payments of tax down, because the payments on account are anticipating you're going to do the same level of work the following year. Doesn't always happen. You might buy a van, you might do less work. There could be lots of scenarios where you can look to reduce payments on account of tax. And if that is the case and you can prove it, then your accountant can put that claim in, saves you paying the tax to them, which you'd only claim back at a later date. No point doing that. Similarly, if you know that you are going to be making quite a bit of money and you reduce your payments on the tax down to zero because you're a little bit naughty and you want to save paying the tax man because you think you're paying up front, they will hit you with interest and charges at a later date once you submit the next return. So just be careful. If you're unsure of anything, speak to your advisor, speak to your accountant, they will help you out. Again, any questions, drop a like in the comments, so drop a comment in and I'll respond to you. I'm going to do a lot more content, lots of little brief videos. If you've liked this video and want to see sort of more content, please like the video, please hit the subscribe button on the YouTube channel. We'll be putting a lot more videos out in due course. Take care for now.